everybody. Welcome to the Trading Market Technicals morning call video for Monday, November 26th. On our previous video on Wednesday before the holiday, I said look for possible continued gains. History usually does repeat itself, usually becomes a bullish bias for the week. And sure enough, we had Wednesday and Friday some real big gains for the week. And as you can see here on the board, our sector performance, we had a little over 3%. NASDAQ at 4% for the week. And then if you look at the board all the way down, commodities, the only two negatives were the dollar, which is inversely correlated to our equities and commodities sector, and utilities, of course, a safe haven sector. And plus, that's been getting battered lately because of the new tax plan that should be taking effect coming the new year. So although I do see utilities, I do see an XLU trade coming in the next couple of weeks actually. So I will keep you posted with that. But nice week basically, even in a shortened week. The only thing that's really concerning to me was that on Friday and Wednesday and even on Tuesday we had anemic volume that is really a word of caution. Is what I would like to use. So I'll discuss that as we get into the charts. But let's take a look at our performance on our 1 week performance: consumer goods, industrials, financials, technology. Again, green across the board here, as you can see. And take a look at our indices. And dollar down, everything else up. Dow, Nasdaq, S&P Midcap, Russell. Gold even up nice. We had a nice big pop in gold, and then oil. And gold actually is going to be a good seasonal trade because gold usually has some strength between now and the end of the year. So I think the next pullback in gold, as long as it produces a higher low, should be bought into, and that's something I'll be looking closely here. Oil too as well. A lot of headline risk in oil due to the Israeli conflict. So this is something that I will also be keeping an eye on as well. But we did have some good numbers, no question about it, on very, very light volume. That's going to be a word of caution. And I like to see where are we going from here. I have a lot of charts, a lot of indicators that I want to point out to you. I'm going to dive right into it, take a look at the dollar, and then we're going to go right into the indexes as well. Okay, so our first chart, which I always like to look at, is our S&P bullish percent chart. Now, as you can see here, we're kind of breaking up, and we have our 8-day momentum indicator, which is my moving average. I like to see kind of follows, hugs it really, really closely when we're moving higher. Kind of good trending indicator. And as you can see here, we're kind of just basically breaking above it. We were at that 57.5% just about, and then the market's popped up. So this is something that I like to see maybe chop around a little bit, maybe one more pullback, and then a push higher. As I see the markets today, we're down a little bit in the pre-market session as I'm recording this, and I would like to see a 1 to 3 day sell-off, okay, on light volume. As it was on the upside, I like to see it on the downside, and then heavily buy into this going into the end of the year, looking for that Santa Claus rally. Now, remember, guys, anything can happen. News can trump the charts. Issues with Greece is still upon us. So there's a lot of things going on that can actually trump the charts. But we have to plan historically. This is usually a big time of year, and we usually get that Santa Claus rally. I think we get one more pullback, whether it be just only for today, tomorrow, Wednesday. I like to see a little bit of a pullback. We are overbought already. It's been just literally straight up since the congressional leaders were talking about, how they're going to fix the fiscal cliff. So really, I wouldn't be buying stocks right here. That's just not me personally. Just want to give you a heads up on that. Okay, so now let's take a look at our NASI Weekly. And this is a great indicator. And I mentioned about 7 weeks ago how we had that sell signal in the NASDAQ. And look at what happened. We rolled all the way down, 7 straight weeks lower, and then last week we have our first push up. Okay, so this here is giving us a buy signal now for the Nasdaq. Now don't forget, we're overbought, so we could still pull in a little bit, as long as we're not taking out this candle here from last week, and still be on the buy signal. So this is something I'm going to watch this week. Very important. This will give me getting me long Nasdaq stocks, and I'm going to aggressively look for this to get long. Long as this holds here. So this is another good indicator. And again, guys, all of these indicators we use together in sync, not just one. So one is not a holy grail. Just please keep that in mind. Okay, so now we have the NASI. Now let's take a look at our NYMO. Now, trusty NYMO. Below the break, we broke down below, and I mentioned that here. I said, guys, we just broke below. We're back into the Bollinger Band and the NYMO, and we're at negative 94%, which has produced great buy signals. And sure enough, we exploded to the upside the last 3 days, and now we closed out of the Bollinger Band. So back in it today, if we close back in it today, that will give us a sell signal, a short-term sell signal in the market. And that's what I'm going to be looking for today. That's another indicator that I'm going to use tonight to say, hey, I'm going to be looking to sell rallies at least for a couple of days. And this is something I'm going to be looking for today. So this is a great indicator, guys. You should be following this every day at the end of the day. And this is an end-of-day close, EOD. So let's take a look and see if this thing closes back in it. If it does, then that's going to give us another sell signal as well to look to sell the market for the next 2-3 days. Okay, now let's take a look at our S&P 50 above a 50-day moving average, and as you can see here, produced some great long trades here, here, and now here. So this is we got back down to that 20 percentile, and anytime you get into that 20% range, gives us a good pull, gives us a good buy signal, and sure enough, we did. Now we are not yet obviously oversold in this indicator, but it is moving up, and we're at the 50 percentile. So a big move here, another great buy signal. And if we pull back a little bit, chop around, that's another good entry to get long. But let's just see where that goes. I do like that a lot. Let's take a look at the advanced decline. Same thing, as you can see, when we had these major lows put in here, we had that little pop here, and here, and then here, and then of course in between, these little pops in between. But this here, when we get down below negative 500, 400 to 600, that'll get you a bottom here, and sure enough, we hit that high note. Now, we're also almost above it already, so this is another one that we're up 300% that above stocks that are above the 50-day moving average. Now, this is something, again, that we've moved up really vertically, guys, here in the last 5 days. So we're back up at these sell signal territory, so just keep an eye on that as well, okay? And let's take a look at one more. I want to look at a couple. Let's look at copper on the weekly chart. Really constructive here on a weekly chart, guys, and I have a bunch of weekly charts here, a couple more that I want to show you. Copper weekly, nice big symmetrical triangle here, actually trying to form a bottom. If we break out of this here, this is going to be a great sign to get long stocks. Now, it's a weekly, so it's going to have a lot of work to do, but it's a good sign that if we can get back up here, break back out of the upper trend line, chop around a little bit. So this is going to be at least a few weeks, but this will get us into the first of the year, and I want to see really curious to see how we're going to trade the beginning of the first quarter. Usually we get a little bit of weakness, but that doesn't mean that it can't happen. So this is something I'm going to watch for, but nice symmetrical triangle. Now let's take a look at our copper daily. As you can see, we need to really get above this 355 area, and we do have some overhead resistance of our 50 and 200 day moving average. So there's going to be a lot of overhead resistance, but at least, which is constructive, that we've been hanging up of the upper end of the range. But I didn't see copper move like equities did, and copper is a follower. So I'm a little concerned with that. So that's something that also I want to take a look at. Relative weakness to the S&P, as you can see, copper, our S&P ratio, lower. So this is something that I'm a little concerned that copper didn't take a big move like the other sectors did. Now, let's take a look at the dollar. Now, the dollar is going to be really key here. There's a couple of good spots here. This is a dollar weekly chart. Now, again, weekly, we're probably going to go into the next quarter. But nice big move up in a weekly chart. We're back at the upper end of resistance area here. I see a nice big head and shoulders pattern with our neckline coming in around 78.20. If this does play out, I think that'll get us to test the highs of the market. Okay? Now, that's what we're going to be looking for that last push or that big push up to test those highs in the market. Now, the only way it's going to do that if the dollar breaks down, and that's the only way. If the dollar does not break down and starts to move up higher, then we're going to get that sell-off, maybe come the first of the year. But, again, looking short-term now at the daily, but I like to see what the weeklies are doing. We had that rising wedge right into resistance. Boom. And then sure enough, we roll right back over here. Now, we are at a key level. Now, if you look at a 4-hour chart, which I don't have in front of me, but I have a daily here, 4-hour chart is going into heavy support, as you can see here. Same thing. And this area here if the dollar holds here and starts to climb back up again, that's going to give us our 1 to 3 day sell-off that we're looking for, which I think may happen. Okay, we are a little bit weak in the pre-market. Let's see if we get a little follow-through. And if that's the case, then I would look to get your long list ready and start looking to buy some stocks, maybe getting towards the end of the week. But I'd love to see a little pullback here. This is going to do it for us, the U.S. dollar. Okay, now let's get into our sector chart. 10-minute, just a quick 10-minute overview. And as you can see here, that was the congressional leaders talking about the fiscal cliff. And then sure enough, we popped up in 3 days. We moved up higher. And that's when I had mentioned, we usually have that holiday reversal. And sure enough, we did get there. Now we're back into this range again, right? So we're back into this heavy area. It is the spiders, the 142. 1420 in the S&P is really big resistance. And I want to show you that. Come here. Now, here's the weekly chart. And here's that long-term trend line. And then we have that shorter-term trend line on weekly. Still long-term, big move up. But we do have sell signals still on indicators here. We have not turned up yet. So this tells me on a weekly chart that we should pull back a little bit, maybe unwind this sell signal here. Still needs a lot of work on the weekly chart, but guys, still again, nice bounce off this. That's why it's always nice to look at the weekly and see where there's any long-term trend lines. And sure enough, we bounced right off of that. Okay, now let's take a look at the daily. And as you can see here on the daily chart, we did bounce off that 61.8% retracement. That's why I like putting the Fibonacci's coming off the top. Where did we come from? Now we are crossing over, right? Good constructive move up. Histograms are making higher lows, and higher highs, and we're getting our crossover that we're looking for in our MACDs. Now the problem is that we are overbought already in the last 5 days. Friday was just total out of control mayhem when you have people buying up, and mostly they were all machines if you ask me. No volume at all, and I'll show that to you in a spider chart. But big resistance here, 1420, 1426. We're into heavy resistance, and then this is where we really need to come around 50-day moving average and really start chopping around here. So still got a little bit of way to go. I mean, we could pop up higher, but right in this band here, we're coming into this band of resistance. ATR, S&P daily, simple chart. As you can see, we didn't get quite back in this area, but sure enough, we started to roll up. Big move up in the ATR, and then now we're starting to roll down again. So again, nice clean chart, nice little move higher. Now the spiders, and this is going to be the theme for these charts, guys, is no volume. And I get a lot of questions like, oh, there's been no volume since 2009. Does that really matter anymore? Absolutely. For me, it does anyway. I look at volume. Price and volume is what pays us traders, and that's really what counts. Indicators are secondary. So I just like to see where I am, and this to me is really dangerous, really scary actually, to have volume come all the way up from here and then literally drop at the last big move up. And that's why I mentioned mentioned a bunch of traders said, this volume on Friday is really suspicious. No volume. Nothing really moving but junk stocks. And when you get junk stocks that are finally moving up on Friday, the small caps, but really garbage small caps, that's a hint to say, hey, I've got to use caution, either sell stock or start looking to leg into a short position. And that's what we had on Friday. So we'll see what happens next couple of days. Okay? Bad volume. Look at this, anemic. And then again, we do have our indicators that are moving up with price, obviously, but it's secondary. So just use a word of caution. If you are long and you want to ride this little bump out, if we do get a little bit of a sell-off, then fine. Then ride it off because we're still looking to get our Santa Claus rally if you're not looking to put any puts on for protection. And here, diamond, same thing, guys. As you can see, anemic volume, no volume at all coming down here. We did get a crossover. MACD's trying to cross over, looking very constructive to the bull side. What I like to see now is a little bit of a pushback, recap maybe 50% of this move, make a higher low, and then start to rally back up. And that's when we look to buy stocks. Transports, again, really good. Now, this is something that I like to see. MACD still got a little bit of work, but I like to see this now. We're back into this 20 and 50. 200's way up here, and we have this upper trend line. So we're still in this long-term trend line. So I'd like to see this pull back again, and then take a break a little bit and regain some momentum, which I think the transports are going to actually do. It is their time of the year, at least the truckers are. Again, IWM's really bad volume. Same thing here. Picture show tells the same. Now, we did break back up again. As you can see here, we're sitting right on the 200. So a little bit move back, and then a nice big thrust up higher would do it come to the end of the year. But as you can see, the theme, no volume on this move. Okay, same thing. Now, Apple. Same thing with Apple. Literally dropped off the cliff here. We had a bunch of guys that took a lot of longs back in at 520, and then some guys got stopped out at 518. Some guys added back down, and then on that big bounce up again and re-added. So good move up. We did get a big down reversal day, held that low, and then we're back into this area here. Again, 600 for me. If you guys are still long, 600 is going to be really the area. I think it's going to have a lot of trouble, and it needs to prove itself before me getting into a long position. And saying, again, I really don't trade it other than maybe some options. It's a little bit easier to manage than the stock, but nonetheless, 600 is going to have a tough time. That's going to be really our target coming off this low, and then really need to reevaluate and see where we are from there. But 600 is going to be the area. Again, really bad volume here. So need to see what happens in the coming days. And just to follow up on the Qs weekly, nice long-term trend line. We held that. Again, volume was anemic, but again, we did break higher than the previous week, so it is constructive. And as you can see here, we're still on sell signals in our indicators on a weekly chart. And last one is the daily Qs. Back up into the 200-day moving average. Again, volume lower. So the daily indicators are turning positive. Weekly indicators still have a lot of work to do. I'd be looking for a pullback on at least 1 to 3 days anywhere today. But if we get a big flush today and we get back to that oversold reading, then I would be looking to buy stocks. But until then, I would use caution buying stocks way up here because nothing does go straight up, guys. You'll have at least one pullback to get into that Santa Claus rally, okay? Have a great day, everybody, and we'll talk to you tomorrow. Take care.